macro markets, Bitcoin. Now we're getting into a very uncharted water territory, whether or not Bitcoin is in the right place to buy, or is it possibly a wait and see? We're going to talk about that today. Get into a little bit of detail around that with Jeff Ross. I think you guys have seen him on the channel before. It's going to be a good conversation, so you're going to love it. My name is Paul Bear. Welcome back into Tech Path. Joining me today is Mr. Jeff Ross, coming in from Vailshire Capital. And you've been on the show many times now. You're old hat for this show, so welcome back.
I am. I got to come up with something more creative so that it makes it more interesting for your audience. Thanks for having me back, though, Paul. It's always good to be here.
You bet. Listen, if you guys have, if you want to learn about what Jeff does, go over and visit his website, Vailshire Capital. He does a ton of fund management, so of course you can get into that if you're into that area. One of the places to check out, and of course, if you're not following him on Twitter, that's one of the best places. So we're going to start actually on a tweet from you, Jeff. And right. we'll get to a tweet, and really kind of the idea around this that I want to get into is your statement here, and I'll zoom up on this just a little bit. Hang on one second. There we go. Why am I currently long bullish, big arrow, and short-term bullish, small arrows, about Bitcoin price action in one picture? Talk to me about where you see, because it looks to me like you're good on Bitcoin all the way out here, both on long-term and short-term. So tell me all about this.
Yeah, so we can talk about all the macro reasons to be bearish maybe at some point, but I will tell you based on from a TA or technical analysis perspective and a momentum perspective, which is what I focus on primarily for many of my trades, Bitcoin looks fantastic here. And I tweeted this out. I don't remember what day that was, a few days ago maybe. But you know, we have this long-term channel that started during the beginning of Bitcoin's bull market, which was December of 2022. Now, I know most people in your audience know the history of Bitcoin. It tends to go in these 4-year cycles. When it starts, after it bottoms, it usually goes on about a 35-month bull run. It obviously has down months, down weeks, down days for sure, but in general, the trend is higher for about 35 months. So I actually anticipate that this bull run, which started again, I think it started December of 2022. I think we're going to be talking about this bull run all the way towards the end of 2025 now.
Okay.
So that's what the long-term channel signifies that. And then the short-term, for people who are interested, I use the indicators that I like to use, RSI, so relative strength index, as well as the MACD. Both of those are pointing towards at the bottom of its regression channel. So basically its average prices that it's been at since December 1st, and then a couple standard deviations away. It's, as you can see, where these small arrows were on the farthest right, the small arrow where it says short-term bullish, that's where it transgressed the channel. Those are usually fantastic buying opportunities, and you can kind of compare that to the RSI. So anyways, great time to buy from a short-term perspective, and then if you believe that we're in a long-term, about 3-year bull market, then it's a great time to be buying, I think, for the long run as well.
So Jeff, there are a couple of things that we could look at in terms of the adoption curves that we'll see maybe on this next halving cycle. There are some new players in the game. We've got Fidelity in the market now. We've got a handful of, I think, more institutional investment. They're starting to look at this. Obviously, this is all kind of pinned in with what's happening with the banking crisis, of where capital flight is also shifting to. If you look at that and really kind of the long-term aspect of where Bitcoin, I guess my question to you is, do you feel like it's a risk asset still? I mean, we hear people now saying that maybe Bitcoin is no longer a risk asset. What are your thoughts on this?
I hate to say it like this, but I also agree. I don't think it is a risky asset at all. I think the only unknown about Bitcoin is short-term price fluctuation. We know everything about the Bitcoin monetary policy. It's hard-coded. It's practically ossified by now. We know how many Bitcoin there are ever going to be, right? Just right under 21 million. We know the supply schedule going all the way out to 2140, and then there's no new Bitcoin issued beyond that. There is nothing unknown about the monetary policy of Bitcoin. So when I like to say this a lot, it's only in academia that people believe that volatility equals risk. I think true risk is the chance of losing your purchasing power over time in a given investment or trade. So I would say that there's nothing more risky, and this is going to rub people wrong, but in the US dollar, in fiat currency, even in US treasuries, which are supposedly risk-free, I'm telling you, you're guaranteed to lose purchasing power over the long run in those type of vehicles. And I would say, can't say guaranteed, but you're very, very likely to increase your purchasing power the longer you hold Bitcoin. And I still subscribe to that.
Yeah, and the argument I hear from fund managers all the time, they're obviously looking at just what we've seen in terms of yields on money markets and seeing cash for the first time, really being in a good position to go out and earn some yield, which has been another factor into this. But back to your point, which is also why we're starting to see a little bit of capital flight, from the smaller banks. And I think in general, most even business treasuries are now starting to look at that as a strategy, to go in that direction. But even if we get a fraction of business treasury and or high net worth individuals, business owners, and then you get into obviously institutional capital, etc. Here was a tweet by Genevieve. This is coming from Grit Capital. Good morning, everyone. Institutional investors now have been dumping stocks for the last 12 months. And you have to ask yourself and questions when you see this. If you look at this, there is the institutions, kind of that darker blue color there, if you guys are seeing this. And I'll zoom out on that so you can kind of see a little bit of the whole chart. But you can kind of see it right there. Hedge funds been somewhat flat. Individuals also starting to trend slightly down, but not near as much as institutions. Where is this money going? Is it just flipping out into some of the money markets and treasury bills? Where are we going with this cash as opposed to securities?
That's what I think. I think this banking scare really woke or scared a lot of people. And so people are transferring their money out of things that they have commonly held them in. So for the last decade, right, you put them in just stocks, you don't think about it, index funds, mutual funds, and then you leave cash in the bank account. So now people are starting to question how safe all of that is. I do think that most of that money is heading into money market funds and treasuries as well. So we'll see. People tend to do the wrong thing at the wrong time as well. And I think people get too scared when they should start to be optimistic, and too optimistic when they should start to be a little nervous. So we'll see how it ends. But I see a lot of fear in the markets right now. A lot of people calling for this big recessionary bear market. I was bearish, very bearish last year, as you know, on your show many times. But I'm tilting. I like to say I'm tilting crabbish now. I think sideways, choppy is probably the direction we're going to be staying in for a while. So we'll see some things start to outperform. And I'll just add one more caveat for my clients personally. We've fully allocated now to our positions of basically preparing for stagflation. So this decade, I've been saying for a couple of years now, this is going to be a stagflationary decade. Overall, obviously there are periods where it's not, but for the most part, we're going to look back kind of like how we look back in the 1970s as a stagflationary decade. And I think similar to the 70s and similar to the 2000s, where we saw an underperformance of tech, but an outperformance of value over growth, and we saw an outperformance of gold and commodities, hard assets, and now we have Bitcoin. I think those things are going to be the place to be. Those asset classes are going to be the place to be for most of this decade.
Interesting. Okay. All right. So playing in that vein, you obviously have a lot of macro pressure coming in. This was Charlie Biello coming in. U.S. House starts. We're now down 22% over the last year, 12 consecutive year-over-year decline, longest down streak since 2009. This tends to be a leading indicator for the economy around recessionary signals, this being how starts the housing market itself going into this. And now we're starting to maybe see these trailing indicators that we've kind of known have been coming, credit, obviously the pressure on what will be scenarios playing into commercial real estate, and now maybe in the residential markets. How long out before we flip out of those trailing indicators that we kind of known have been coming, before we see the Fed go, all right, enough pain, we're ready to try to spin the bottle here and go the other way?
Yeah, outside of a major calamity, I don't think the Fed is going to be pivoting anytime soon. So I do think they're pausing. I think it's most likely that they're done hiking rates already. In fact, I just looking at the CME futures today, I think it's still a 77% likelihood that at the next Fed meeting, which I think is mid-June, that they're not going to raise anymore. And so I agree with that, and I think that's actually what gives me a little bit of optimism and hope. Is one is that the monetary supply, the net liquidity in the U.S. I misspoke, not the monetary supply. The net liquidity in the U.S. is basically flat. It's been
Hmm.
flat since about mid-March after it elevated to its higher levels because of the bank term funding program. It's sort of flatlining at that level. When that happens, that means to me that risk assets are most likely to kind of flatline or go choppy sideways.
Right.
And then the Fed pause rally is real, and we've talked about that on the show before too. When the Fed pauses hiking rates, risk assets love that. They've been beaten down
Yeah.
and hammered for such a long time. I think they're sniffing that out, and that's why we're seeing a bit of a rally. We've been seeing a lot of that this year, partly because of liquidity. Today, we're seeing a bit of a rally because of Biden is talking about how he thinks we're going to get a good deal going for this debt ceiling debate, and we're going to raise the ceiling. That's encouraging as well. I think in amidst all of the pessimism out there, and there are many, many, many reasons to be pessimistic right now, I think there are going to be some shoots of optimism. And I think risk assets are going to sense that. I also think Bitcoin is going to sense that. And I think people are going to be surprised at the performance of some of these assets heading into the summer.
Interesting. Okay. All right. So possibly around 27 right now, Bitcoin holding in, possibly a good entry point if you're looking at more longer term positions here on Bitcoin as a whole. Kind of our scenario, we don't do a lot of swing trades on things like Bitcoin and Ethereum, but we do in an oversold position do kind of some similar things to what you do, and that is exit, re-entry of position, all those kind of things. If you look at further aspects in the housing market, this was a tweet by you. Shout out to Fed-induced housing unaffordability, coming from David Sachs, of course, over from the All In. According to Gallup, fewer Americans now than ever before believe it's a good time to buy a house. So no one is saying this is a good time to do it. This could open up some opportunity of capital that normally would have been going into the housing market. People might be looking at saying, well, wait a minute, I've been saving all this, and now I'm just sitting on cash over here. If we start to see a downtrend on treasuries, where would that kind of capital go as people are looking for putting that money to work as opposed to going into the real estate market? What are your thoughts?
Well, first of all, I actually think that so yes, it's unaffordable, and I just want to clarify what I meant by that shout out. The Fed and central banks around the world have been doing this easy money policy, zero interest rate policy
Mm-hmm.
for a decade prior to this.
Yep.
The recession we're sort of in the middle of. I shouldn't say recession, the downtrend that we're in the middle of. And so, what did that do? It caused massive inflation of the everything bubble, right? And one of those was real estate. And so the price got out of hand, but it was still affordable because rates were low. But then
Right.
the Fed comes around and they increase rates. So now mortgage rates sitting at whatever 6.5% or 7% on these still overpriced houses. People just can't afford these, especially millennials, Gen Z. They cannot afford to make a down payment and buy a house at these prices. So there is still some interesting things to get worked out. Now, on the other side of that, there is a housing shortage still in the U.S., which is also interesting. And so you have to kind of look at those long-term supply-demand dynamics. And why do I
Yeah.
bring that up is because I think it's actually still a reasonable investment. And based on my theory of stagflation for this decade, I think that home builders are actually a good place to be. And home builders are extremely sensitive to rates. So when we see the long-term rates, like the 30-year, 10 to 20 to 30-year treasury rates,
Mm-hmm.
start heading lower and lower, home builders really pick up on that. Why? Because mortgage rates come down with those, and so people are
Right.
more likely to buy. That's a boon for home builders. So I think that's actually a pretty smart place to be for the coming several years. That's one of our major positions within Vailshire portfolios.
Interesting.
Where
Okay.
else is that? Yeah, yeah. So, and we can go on that. But so, where else do I think? I kind of hit on that a little bit before, but I think that companies with high free cash flow yields, I really like those in a stagflation environment. They just know how to generate cash regardless of how terrible the environment is. I like those kind of companies for this decade. And then commodities, hard assets in general. And then we talk about sound money alternatives to the dollar. So gold is, if you're a gold bug, is great, and maybe gold miners.
Right.
And then also obviously Bitcoin. I think Bitcoin's going to perform quite well this
Interesting.
decade.
That's a good portfolio. I still think, as we see more and more people looking at these alternatives, especially we start to see the weakening dollar around these markets playing out. With back to the point on Chair Powell, if we do see, well, most likely the pause comes in and it holds for some time. You still believe that's a bullish signal for risk assets? Bitcoin's going to react in a positive way. Before we see a spin, which will most likely happen maybe end of year, first quarter next year, where they do start to do something with that and start going into quantitative easing again, where will be the opportunity, especially with things like Bitcoin and other assets in that category?
I think the opportunity is actually right now. So similar to that chart I posted, I think Bitcoin is currently at these oversold levels. There's still quite a bit of pessimism out there. This is
Okay.
different from NASDAQ stocks, right? NASDAQ has been performing quite well. It's been hanging out. It's getting kind of up into overbought levels. So you have to be a little careful about starting a new position here. But for its part, I think Bitcoin is basically my number one idea right now. And I'm not big into crypto, but I'm sure crypto would do pretty well if Bitcoin does well, for sure. Now that's for a season, right? Because I still think that at some point we have this price to pay. Here's my theory, though, and I don't see a lot of people talking about this as far as my crab sideways kind of prediction for what I think is going to happen. I am not overly convinced that based on probabilities that we're going to see a massive deflationary bust followed by a huge QE next by the Fed. Why? Because I think that the one is that the underlying economy is still kind of hanging in there. Like parts of the economy are still pretty strong. And two, and this is important, is that inflation, I think, is going to be volatile and kind of sticky high for much of this decade, if not the entire decade.
Right.
Again, similar to the 70s, even though I know it's very different from the 70s, but the inflation part, I think, will be kind of similar. Because of that, I think Powell is going to be really reluctant to come back in, guns blazing with massive QE, causing this massive, next bubble in asset prices. I think it's more likely that he sort of watches it for a while and we'll see some mild disinflation, but then it's going to kind of hang out at these annoyingly high levels, like maybe 3%, 4%, 2.5%, sort of in that range. And then I just think he's going to be reluctant to really bring out the bazooka. And I think most people are expecting that, and I'm not convinced that that's going to happen, especially not anytime soon. That might be, well into 2024 before they would pivot into something like that.
With that being the case, though, Jeff, if you look at if that was the behavior of the Fed not to go in the direction of easing up on interest rates, now we're getting into not only sticky inflation but also sticky high interest rates, which again it eventually starts to see that trickling down effect into the markets, and whether it's housing, credit, consumer credit, all the way into companies who have less access to capital, which creates less jobs. All those kind of things play into that. With all of that happening, now you have also another halvening coming around on Bitcoin itself. So does it just put Bitcoin in a position where it's on a slow trot that's either sideways and slightly up as we move into the next halvening in 2024? Is that your theory?
That's how I view it. That's my, and it's all always based on probabilities, right? I don't have a crystal ball, but that is my guess, is that we're going to just sort of see a slow, choppy grind higher in Bitcoin over the coming several years. Before at some point, though, I think the shoe will drop and the Fed will be forced to pivot and will be forced to do some pretty significant QE. I just don't think it's happening anytime soon. If that were to happen, I think Bitcoin would sniff that out quickly and really catch a ride there.
Obviously, we're seeing potential U.S. debt default could come into play here. I don't think we're going to see these kind of things. These are posturing elements that will play into this. But it does put everybody on the edge. I mean, we've definitely seen that. This was another story right here. Democrats, of course, now pressing Biden to use the 14th Amendment on the debt ceiling. Again, another political play of utilizing tool sets to not have to go negotiate on some of the things that the GOP is trying to do. Here was a clip by Speaker McCarthy. Let me clip this for you so you can hear it, and we'll play this for you. There we go. Well, it's not coming through. I'm going to try to get that for you because I don't think we tested it before going out there on it. Hang on one second, guys, and we'll flip over to that. Let me get to the sound. Sometimes these things will come in on that. There we go. This should click that and fix it. Let me see if we've got the audio now. Let's see.
Could come to an agreement.
There we go.
That is what the decision was made in this meeting. So the structure of how we negotiate has improved. So it now gives you a better opportunity. Even though we only have a few days to get it done, had we done this back 97 days ago, we'd already have a bill passed. Yes, ma'am.
All right, so kind of, again, positioned very far apart, but at least they think they've got a deal. All right, I always love that. We're very far apart, but we think we have a deal. That's an interesting one. That's only DC speak, I think. That means
Right.
they have a deal, but they want to act as if, they really worked hard to get that. Anyway, any possibility here? This is just a no, kind of a no issue for the markets. I think nobody's really considering this right now.
Yeah, I don't think so. I agree with you. I think it's all posturing. I can't stand politics, so I try to avoid it as much as possible. But we have to talk about it a little bit when these kind of things come up. So I think worst case scenario is not a default. I think worst case scenario at this point would be that they punt it for a few months, that they say, okay, we'll give you a temporary raise, a small raise, and then we'll readdress it again maybe in September or October. That would be an unfortunate but not too terrible of a consequence. But I think most likely they're just going to get a deal done. And that'll be at least a short-term net positive for the markets.
Yeah, and based on what they're talking about right now, Biden's coming back from his trip to Japan. McCarthy's kind of saying both sides are still far apart. Back to that clip right there. But really, borrowing costs into late June now are rising. That's a factor that could cost some money, to the markets in general. And then they look at this and say, hey, the agreement this week is pretty crucial in being able to do this. Some people think it's going to happen. So do you think we'll get a bump? If we get an agreement, debt ceiling, we know it's going to get raised. Let's say it's a small amount to kind of kick the can down the road. Will that have any effect on the markets overall, other than just giving some breathing room?
Yeah, I always like to reserve the right to watch what happens leading up to it and to see if it's going to be a buy the rumor, sell the news type event, or the opposite, right? A sell the rumor, buy the news type event. So I could see it being, so right now, for instance, the Q's NASDAQ is up about 1.2% today on this optimism that it goes through. If it continues to go up and it's right along the upper bounds of its range right now, meaning it's kind of overbought, I could see that taking a serious breather if they do. That would be a buy the rumor, sell the news type thing. Bitcoin being oversold, I could see that being the opposite, and it would kind of make sense, right? We decide we're going to take on massive debt as a country. Bitcoiners like, hey, that's even more reason to own Bitcoin because liquidity is coming, more debt's coming, more credit's coming. Buy Bitcoin, and so I could see kind of a counter reaction: NASDAQ down, Bitcoin up if we do have an agreement.
Couple of good things for Bitcoin, I think, in general. Again, another grid, the GRD, that's grid capital. But anyway, staggering fact: U.S. now spends more debt servicing the national defense. So this is a problem that's going to continue to rise as a whole. Most likely, this is going to result in higher taxes here in the U.S., significantly higher taxes. Because it's really one of the only ways they're going to be able to go to this. And then obviously what we could see is the de-dollarization that continues to happen on a global perspective, which again is good for, I guess, for Bitcoin, but bad for maybe the global economy as we continue to see this play out here in the US. Last tweet right here was more, I think, good news. This was Tether saying they're going to go out and each month they're starting to talk about regular purchases of Bitcoin for its stablecoin reserve. So another big player in the market right now looking for Bitcoin, back to your point, maybe seeing a slow trot up over the next few months. With all those things, Jeff, and you look at, global de-dollarization, what we see on the global fronts, whether it's BRICS and all that, is there any possibility that we start to see the U.S. to actually get a good framework around Bitcoin as a whole with real strategies moving forward from a lawmaker's standpoint? Do you think that's possible in the United States?
I think it's inevitable at some point, but I think it's going to be kind of a painful process along the way. I know I actually have lots of friends in the Bitcoin space who go regularly to DC to educate lawmakers on what Bitcoin is, just kind of the basics of Bitcoin. And so they're coming around, but it's a small minority still, so it's
Right.
still going to be painful, I think, along the way. But I because of my stance on Bitcoin, I think it's because it's just such great money. I think it is better money for a better world. I think it's inevitable that at some point, even lawmakers and regulators will get it, right? There may be some that will never get it, right? I'm not convinced that Brad Sherman or Elizabeth Warren, or the kings of finance like Warren Buffett and Charlie Munger and Jamie
Yeah.
Dimon, I'm not convinced that they're ever going to get it or admit to getting it before their lives are ended. And I'm not wishing any badness on them. But, they're getting older. And so the next
Yeah, sure.
generation that's coming up, Gen X, millennials especially, and obviously, Gen Z, they understand it. It makes sense to them. They're not scared by the fact that it's digital. They live in the digital age, so they completely understand it. It's not scary to them. Though it's coming. I hope it comes sooner than later, and it's just a matter of education. But until more and more people get educated, it's going to be kind of a painful process along the way.
All right, so there you guys heard it, bullish from Dr. Bear, known as Dr. Bear, but now kind of more Dr. Bull. We're going to get over to a poll real quick, Jeff, and hear what the audience had to say on this one. Let's take a look real quick and see. We'll bring it in, maybe. I think we got a poll. Yeah, there it is. All right, will debt ceiling be raised in the next 30? Yep, nobody's worried about this at all right now. So easy peasy for that. So not a big deal. Again, do we see a nice little bump on Bitcoin? Okay, maybe that's a possibility for where this is going. Jeff, always good to have you on the show. Thank you so much for stopping in today. We appreciate it.
I love it. Always love being here, Paul. Have a great day.
You bet. All right, good luck. All right, let's go, guys. If you're not part of the Diamond Circle, make sure and get in. It's a great place to start your additional education process. Maybe you're brand new to Bitcoin or brand new to crypto. We cover a lot within the Diamond Circle, including Metaverse and Web3, all that kind of stuff. Technology as a whole all lives over there. You can, of course, join by just clicking the link down below. It's easy and it's free. And of course, if you want to reach me, it's out there on Twitter, @Paul Barron. We'll catch you next time right here on TechPath.